much more. Joining me for the hour, we have Josh Brown, Stephanie Link, Jim Lebenthal, and Brian Belsky. But first, let's get a quick check on the markets right now. Taking a look at where we're at in the markets right now. You can see we're in the red across the board right now, looking like we're on pace to snap that 6-day win streak for the S&P. Also for the NASDAQ 100 right now, the Dow pulling back about 0.25%, the S&P down 0.33%. Same story for the NASDAQ. We also got to take a look at the picture when it comes to bonds. Yesterday, that was the big story. Today, we're seeing the 2-year just pulling back a few basis points from 4%. The benchmark very close to 4.5%. The long bond pulling back a few basis points from a 5% yield. They really seem to dominate the conversation here. Josh Brown, your opinion? Again, we're very close to those all-time record highs for both the S&P and the NASDAQ. The S&P just about 3% away. In your mind, is there something that can push us higher or something that might keep us away from getting to that new record all-time high?
I mean, my guess is we're going to break through it. I don't know if we can sustain it or if there's significant upside from there. I certainly hope there is, but if I, like, gun to my head, I would say we might struggle at those old highs for a little while. You could break through, retest, consolidate. There's nothing wrong with that, by the way. It's perfectly okay to have a flat market. It's perfectly okay, given the trauma that we've lived through over the last, I don't know, 6 weeks or so. It's perfectly okay for us to stall at some point. So I'm not necessarily worried about that. I guess the big concern here would be, are we experiencing a bull trap? Did we rally all the way back just to have the stool kicked out from under us? I hope that's not the case. The technicals, though, if you're short-term oriented, have you in. 89% of the S&P 500 are now above their 20-day moving average, 81% above the 50-day, 55% or more than half of all S&P components are above the 200-day. So if you're just purely looking at breadth and market internals and asking, like, is this rally healthy? Is the state of the market advanced, like, sound beneath the surface? The answer is yes. Your macro opinions might disagree with it. Your political opinions might disagree. But people are buying stocks. They're buying almost all of the stocks.
You know, speaking of people buying the stocks, just a little tidbit right here from J.P. Morgan's trading desk. Yesterday at about 12:30, while we were doing the show, talking about the pressure that bonds were putting on the markets, retail investors, they bought net $4.1 billion, the largest level ever for that time of day, a more than 11% standard deviation move. They say they may point to retail investors and also corporate buybacks as incremental buyers. One other note from J.P. Morgan, they put this out earlier in the week, corporate buybacks in Q1, $272 billion, up 24% year over year. So Jim Lebenthal, does that tell you that the market's healthy, that the fact that we're seeing a lot of those dip buyers be retail investors, and maybe it's also corporate buybacks? Again, big jump when it comes to corporate buybacks as well.
Many of us on the desk, Frank, have noted for quite some time that retail is no longer the dumb money. We've got to throw that terminology away. And frankly, it hasn't been for 4 years when it showed up in the meme stock trades and started, really sending some hedge funds into real problem territory. But I say that just to note it. In terms of your question overall about the health of the economy, just synthesizing what Josh said on the technical and Steph, what you said on the fundamental, we have to note that this week we're in a very light week. The macroeconomic releases, there really aren't any. We'll get weekly jobless claims. That's always important. Steph, you pointed out retail earnings, but outside of that, there's really nothing. It's next week that things start to pick up again. But what that means for this week is that what the market's going to key off of mostly is news coming out of Washington, D.C. Now, that may be a little bit like watching paint dry. I get that. You get a tweet from the president or you see a procedural vote in Congress. But really, those are the things that this week are likely to move the market from a fundamental basis is what's going on with that tax bill. And then, the big addy in all of this is trade policy. Uncertainty on that front has come down, but it needs to come down more. We will rapidly get to early July when those reciprocal tariffs are unpaused, and we need to see a heck of a lot more progress on negotiations before then.
All right, we're talking a lot about where the markets are moving from those April lows. A big part of that move from the April lows, that's been tech. One of the names from those April lows that's really pushed the market higher, that's been Tesla. Josh, I want to get your take on Tesla. Of course, our David Faber has a very big interview coming up at 2 p.m. Eastern time right here on CNBC. He's going to sit down with Elon Musk and talk about Tesla, but that stock off of its April lows, bouncing about 50% to the upside. I just want to get your take on Tesla and the rest of the tech trade.
It's a huge bounce off the lows. This is a stock that's become synonymous with huge bounces off the lows. I think it's notable. It's still one of the worst of the worst three of the Mag 7. It's still down 14% this year. Apple's worse. It's down 17. Alphabet's down about 12. Those are the three underperformers of that Mag 7 cohort. I think what's most interesting about Tesla, from my perspective, because I'm not involved in the stock, is the degree to which the whole narrative flipped upside down. 6 months ago, it was Tesla's next big growth engine, before the robots are ready, is going to be these autonomous taxis and the cyber taxi, and they're going to kill Uber. Uber is the third best performing stock in the entire S&P 500 this year. Also my highest conviction position. It's up 52% while Tesla is down. And the narrative now is, who cares about who has the cars? This is going to be a software business and a network effects business. And Tesla's just one of several players that's going to have an app and a bunch of cars. There's only one player that's going to try to connect them all and own the consumer. So, these narratives about like the next engine of growth, and we're going to do robots, and we're going to do connected taxis, et cetera. Look, you're going to see a lot of volatility in the stocks that play in that arena. I guess my point is, narratives change, and everybody agrees on something in January, and by April, they might all agree on the opposite thing. We've seen that with Alphabet just in the last 6 months. We're seeing it now with Uber versus Tesla, and you'll see it again.
All right, Belsky, you also own Tesla. Your take on this big run-up on this company seems to have been moving higher on a lot of just positive sentiment around the relationship with the White House, and also the idea, again, of autonomous driving, as Josh just pointed out. But it is still a car company with sales that seem pretty weak in the U.S., Europe, and also in China.
I think that's right, Frank. And at the end of the day, this stock was oversold. It was a momentum play, but you have to kind of go back and also look at the sector representation. The stock is in the consumer discretionary sector. And that's part and parcel while consumer discretionary has been hit so hard, and over why consumer discretionary has rallied back. So at the end of the day, you have to, I think, be really careful with respect to where you buy this stock in terms of momentum. We obviously own the stock. We actually bought more early this year, and we're a long-term player in this. We think actually Tesla is more of an you want to buy Tesla and own Tesla longer term because of the operating system. Much like you own Apple 20 years ago, you want to own Tesla now for the same reasons with respect to the operating system for the next 20 years.
All right, so you bought earlier this year, so you kind of rode the wave between some of the declines and obviously big bounce off the April lows.
We did. And, again, we are underweight the stock. And our overall theme for the Mag 7 is you underweight the Mag 7 and you overweight other areas with respect to the sectors that represent the Mag 7, namely tech, communication services, and consumer discretionary. Again, that begs to define the stock picking environment that I think we're into, and we have entered officially the golden age of stock picking.
Mo out with the note, your firm, saying that Google search fears are overblown. A lot of concerns about Google search being disrupted by AI search and AI competitors. Your take on the stock?
Brian Pitts is a great analyst for us at BMO, and he talked about a lot of the unicorn companies coming out of San Francisco using the Google platform and their AI once they kind of build up their infrastructure. That's number one. Number two, we recently added Google to our value portfolio for a lot of the same reasons that Jim talked about. We think from a contrarian basis, I think it's from common sense perspective, we're not going to stop using the Google machine to figure out where we're going. And then lastly, we've been long bulls on YouTube TV. YouTube is basically, the YouTube business is just as big as Netflix. And as you know, hopefully, we've been 13-year owners of Netflix, so we love that name. So I think Google is a name that I think that you can, will, and should be continued to building positions in, and it's one of the names that we really love longer term.
Right. We're talking a lot about these different AI players. Big earnings report coming up next week. Got NVIDIA. Josh, you own NVIDIA. Your view on NVIDIA, and especially how this market trades until we get that report. It feels like we've gotten a lot of confirmation on the quote-unquote AI trade and big investments, whether it comes to chip buying in the Middle East or CapEx investments being maintained here in the U.S. But we won't really know until we hear from NVIDIA during their earnings report. What are you expecting from that earnings report? How do you think the market trades until we get it?
I think the most important thing to come out of this past earnings report is that AI is more important than tariffs to the stock market. It might be hard to believe, but I want you to know, and Michael Sembelis at JP Morgan has actually done this research, the term AI was mentioned 2.6 times more often than the word tariff in this last round of S&P 500 earnings reports. And if you ask me what saved the stock market this April, I have to point to the massive gains in the Mag 7 and other AI-related names when one by one, every single important CEO in cloud computing and chips and software came out and said, not only are we affirming our spending guide for CapEx, in some cases, we're actually raising it. If we didn't get that, we're not in an S&P that's 3% from the high. Anyone who wants to disagree with me can, but they'll be wrong. And I have the data to back it up. This is an AI-driven tape. This is still the most important theme in the entire market. Yes, there are other themes. Yes, there are other sectors doing well. But absent AI, there's just no chance that we would have pulled this spring out of the hole the way that we have. And that's because of the affirmed guidance on what's happening with this investment mega theme. So that's how I feel about AI in general. And NVIDIA is the most important company. NVIDIA's situation is it's the sun. And AI is a solar system revolving around it. So I'm long. I don't know. There's a lot of words to tell you what you already know. I'm not going anywhere.
Were you excited at all, really quickly, because we're going to move on, about the Foxconn TSMC deal that they announced, where they're going to all work together on these AI factories to build supercomputers? I mean, it seems like the business they're already doing, but they're kind of bringing in even more partners. They already have a kind of an ecosystem of partners, but 2 new ones.
Yeah, I guess that's great because it's, you know, we want to accomplish 2 things. We want to maintain global dominance in AI, and we want to have the companies in that arena profitable. And unfortunately, that means manufacturing a lot of things, not just chips, outside of the US. But we also want to acknowledge the fact that we probably abandoned technological manufacturing to a way greater extent than we needed to over the last 30 years. And the pendulum should swing back. We should be able to make more than we currently can make in the United States. I think there's room to believe in both ideas. So yes, that's a good announcement. I don't think it would change my opinion on whether or not to own NVIDIA or any of the related companies, but sure, we definitely want to see more of that.
And we're back on halftime. We have an update to one of Josh's best stocks in the market. Josh, tell us all about eBay.
Well, this is a name that we talked about on May 8th. Frank, I think Scott was hosting that day, so you probably don't remember it, but hopefully the gang does. We were talking about eBay in the context of this is a company that's not going to be raising costs on its users or on its customers because it's really not affected by tariffs. Only 11% of revenue on the platform has anything to do with China. 84% of the revenue on eBay comes directly from its marketplace business, and 16% comes from advertising, and almost none of it is related to goods manufactured elsewhere that have to pay a tariff to be sold here. You also have a cheap stock, 17 times earnings versus 26 times for the industry. It's a slow grower, that's why it's cheap, but it's a company with a 30% operating margin, and it has just broken out technically above the $72 level. So we talked about it, let's say 9 or 10 days ago as a breakout, a potential breakout. Now it's an actual. This is basically a stock that the last all-time high was October of 2021. It's still 10% below that level. I think we're going to challenge that level and potentially break through. If you took the trade and you're long, I would use that old resistance level of 69 as my stop, and I would let this ride, see what happens.
All right, Josh, you got 2 other names that you want to highlight today. Both of them at all-time highs, are trading very close to all-time highs, and you see even more upside from here?
Yeah, so it's important to note, Frank, one of the benefits of running the best stocks in the market list is it really gives you an idea of where the strength in the market is and, of course, where the weakness is. Where the strength is in the industrial sector. The XLI is the first of all of the S&P sector ETFs to make a new record high, break out above the old high. We still haven't gotten that, for example, from tech. Within the industrial sector, we have 25 names on our best stocks list. 7 of those names are aerospace and defense. And I know there's some Boeing ownership on the desk right now. We just saw one of the biggest highlights of Trump's whirlwind trip through the Middle East. B, Etihad Airlines committing to buying 28 Boeing jets with GE engines in those jets. That's a $15 billion deal. And all of these stocks have been rallying both before and since we saw that. Axon, you know them better as the maker of Taser. This is law enforcement and defense. The stock is just absolutely on fire. It's a breakout in progress. I would use $700 as my pivot point for risk management. RTX, this is the old Raytheon merged with United Technologies. This is aircraft engines, it's missiles, it's satellites, and cybersecurity. Also breaking out. The $135 level had been resistance as recently as the spring. Now it's back at that high end challenging. Momentum not yet overbought. I think she's going to go. The whole ITA looks great. That's the industry group ETF. That's up 19% year to date. A lot of stocks in rally mode, and these are the best stocks in the market right now.
Pfizer is higher after announcing it's going to pay up to $6 billion to license an experimental cancer drug from a Chinese biotech company. Shares up about 1 1/3 of 1%. Josh, you own Pfizer. One other note on this one. Merck did a similar deal last year. They paid, and Pfizer ended up paying about double for this deal this time around than Merck paid just about a year ago.
Yeah, I mean, it's nice to see the stock green. It almost never is. This is the worst stock I own, has been for a long time. My average cost is in the high 20s, so forgive me for not ripping my shirt off and swinging from the chandelier. I think the key thing here with Pfizer is it had just a vicious low in the April sell-off, down to 21.59, did not act defensive at all. There's almost no point in being invested here. So if the most enthusiasm we could muster on news like this is a 1% jump, I would just ignore Pfizer if you weren't already involved with it.
All right, on 4 straight days of gains, though, Belsky, you own this one as well.
We do. We only own it in our value portfolio. It's a bit of a contrarian name. We're worried about pharma overall, but we're going to stay with the stock.
All right. We're going to stick with healthcare. UnitedHealth, we got to talk about it. We actually didn't talk about this yesterday. Looking to extend some gains after posting the best 2-day rally since all the way back in March of 2020. Steph, you actually just bought some more this last week where it was having some issues. CEO resignation, pulling guidance, Wall Street Journal doing a report that they're under investigation, the company pushing back on it, like a bit of a soap opera.
Yeah, it is a soap opera, and it's still down 36% year to date. It's been painful, but the stock now trades at 9 times EBITDA. They have the old CEO who was at the company in 2006 to 2017, and under his reign, the stock actually rose 350%. He's a great operator, and I do still think that this company is the #1 managed care company in the world with size and scale. 151 million people they serve. They're going to reprice Medicare Advantage. It's just going to be a 2026 story. So I was just buying it because it was down so much. It is, I still believe, the best in the business. They got to get through this pain. It's not going to go up like this for a while, I don't think, but I do like it for the long term.
Jim, you actually sold out of this back in April. Are you happy that you sold at that point? I don't know what level you sold at. But here's the reason I'm asking. Yeah. A lot of people feel like they threw out the guidance just to kind of kitchen sink it and give the old CEO, who's now the new CEO, just a chance to start fresh. And then now we're seeing the reaction in the stock after they threw the guidance out the window.
Yeah, I sold it April 4th. It was up in the 2 days after the Liberation Day debacle in the markets, and I sold it about 546. I'm specifically stating that price because Steve was very kind to me last week and gave me a shout out for selling it in the 400s. It was actually 546. Nonetheless, yes, I'm happy I'm sold it. I think this will turn around. Steph, you know the company. I know the company. Sometimes this happens to the bluest of blue chip companies. And I will say this for everybody who has a little bit of gray hair. You go back about 20 years ago when Vioxx hit Merck. Merck was the bluest of blue chip companies, just like UnitedHealthcare. And the stock went down about 40% in a week. Took a long time to recover. Steph, I don't know how long this is going to take to recover. I really don't know. It is going to be around for the long haul. It will regain its blue chip status. I'm not going to rush back in, but I think this is one that Steph is likely to be proven very right. It's just going to take time.
I mean, $25 billion in free cash flow. You could do a lot with that.
The thing
shares
with that
up
is we just don't know if that's really what.
Now I know why Jim was scoffing, looking at the chart once again, down about 24% over the last month. So well-deserved scoff about if you're happy if you sold.
I didn't mean to scoff at anything regarding.
Stay with it. And we're back on halftime with final trades. Josh Brown, you're up first.
3M off my best stocks list. It's $1.50 away from all-time, 52-week highs. The stock looks incredible.
Brian Belsky.
Stifel Financial, ticker symbol SF.
Jim.
Walt Disney Company. Anybody notice that this thing has a little bit of momentum to it? I have.
Stephanie Link.
Truist, NII is poised to recover 0.9 times book value.
All right, that's going to do it for halftime.
Hello, everybody. Welcome to Blue Cloud Trading. My name is George. It's Tuesday, May 20th. It's 5:28 p.m. as I'm recording this video. We just saw Josh Brown and guests on the halftime report, and they went over a number of stocks. Specifically, this list right here that you see, about 12 stocks. Okay, industrials, ITA, Triple M, Uber, eBay, RTX, Axon, Pfizer. Okay, we're going to look at all of those stocks that they talked about. We're going to analyze them using the Ichimoku indicator. We're going to take a look at the indices also very briefly, as well as the Mag 7 stocks in this video. And we're going to take a look at some of the strongest sectors and one of our members' requests. We'll look at Sony. So let's first take a look at the markets and see how they performed today. As you can see, the Dow Jones was down, actually, down 0.27%. NASDAQ down 0.38%. S&P 500 down 0.39%. And the Russell 2000 just edged up 0.05%. So there really wasn't that much of a move today in the markets. And if you look at the volume over here, this is the little green, I'm sorry, that little blue bar that you see right there. That's lower than average for the Dow. And over here, the NASDAQ, there was a little bit more trading that took place today. Anyway, let's look at the heat map so we can get a better picture of the individual stocks that how they performed. And you can see the majority of them here. Let me refresh this, make sure it's up to date. There we go. Good. A lot of red, but a lot of the healthcare stocks did pretty well. You can see here UNH was up 1.8%, GILD, Merck, Pfizer, Johnson & Johnson. The biotechnology stocks like Vertex was up. Tesla was up 0.51%. But NVIDIA, Apple, Amazon, Google, Meta down today. Berkshire was down 0.71%. Utilities did okay. Let's look at the sector performance for the one-day performance. You can see here that healthcare and utilities, consumer defenses, and basic materials were the top performers, while real estate, communication services, and energy and financial were down the most. And for the 1 week performance so far, utilities is number one, energy is the down 2.18%, as you can see. So that's what we have there for the sectors. Let's look at, so we'll start off actually with the indices here, and then we'll get into the stocks that they talked about on the show. Dow Jones Industrial today on the daily chart is still, as you can see, still in that strong uptrend on the daily time frame. All right, the only thing that's kind of off about the Dow right now is the weekly chart. We had recently a crossover, a moving average crossover where the faster, the green line, the Tengen-sen, which is the 9 period, crossed under the Kijun-sen, the 26 period. When that happens, it tends to lead to a decline. Now, price has recovered since, right? It's gotten above both the moving averages. It's also above the Ichimoku cloud, which is what's necessary for a bullish, continuation. However, not all of the elements here on the weekly chart, because we are looking at a weekly right here, are quite there yet. You can see that the Chiku span, that's the closing price projected 26 periods ago. That is still, I'll just show you. So here's the candle. There it is right there, 26 periods ago. If that happens to be under the candle 26 periods ago, like that candle right there, if it's under, that's bearish. When it's above, like it was over here, it's bullish. So we've got what almost kind of looks like a double top pattern here that has occurred in the Dow. It's pulled back. It's actually dropped since this low right here, right, to this. So it's created a lower low. I mean, there's no guarantee that this thing is going to continue and break through that 451.34. If price moves up a little bit more and then drops, ultimately, that could be very bearish, especially if we start seeing it turning over. That's the thing I'd be really watching for. What we don't want to see is something like this start to happen, because if it starts to turn over, it's going to actually create a lower high from this high, all right, and then we'll basically have an established downtrend with a lower low and lower high. But we're not there yet. Price has been moving up significantly these last few weeks, so we'll see if that can continue. Let's take a look also at FEZ. Now, FEZ, on the other hand, that's the Euro Stocks 50. Let's look at this on the weekly. Notice what's happening, the difference here. A lot of strength. We're talking about 7 weeks in a row of continuing, movement up. You'll notice that price also broke through that 57.67 level. It's based on that prior high. So FEZ is off to the races right now. If we go back in time a little bit, we can see some of the prior levels of resistance where it might find some resistance, like back here, for example, at around 66 level, maybe somewhere in the middle there some as well. But right now, it's still moving strongly on the weekly. Here's a daily chart. I like what I'm seeing, was up 0.44%. Like I said yesterday, Euro stocks are looking much stronger than the American stocks. Dow was down yesterday. The Dow was, the majority of the stocks were lower than the FEZ, including all the indices. So FEZ looks good. There's a daily, here's a 2-hour, very strong uptrend. There is certainly a sector rotation or movement into the European stocks that I've been watching and witnessing, and so I've been more invested in European stocks personally. Here's the Russell 2000. Let's look at the weekly chart. It's under the Ichimoku cloud. It's stalling. So that's not a good sign. Yes, we've had this move here, but it is currently under the Ichimoku. One of the rules of Ichimoku is you don't want to be entering long positions when price is under the cloud, or if the faster moving average, like the Tenkan-sen, is under the Kijun-sen, the red line, the 26 period. Add to that to the fact that the Chiku span, the white line, is still under, and that's all bearish actually still for the Russell. It's had a nice little run up here, but it could potentially turn over. It hasn't yet. It hasn't yet, though. Here's the daily chart. It's just kind of stalling, and it is going sideways. And like Josh Brown mentioned, hey, it's not necessarily a bad thing if price just keeps on moving sideways for a little while as we wait for maybe some positive news to come out that could push the price up further. But there's always the potential of increased tariffs. That whole story isn't over yet. And so as long as that is out there and there's unpredictability in the markets, as you can see, it's stalling at that 209 level. It's kind of hard to make any type of long-term predictions. It's all short-term trading here. That's the daily. Here's the 2-hour. So you can see here, since this date right here, going back to May 12th, it's just been going sideways. So we'll see what happens. Let's look at the QQQ ETF. Has been moving up steadily. Same situation on the daily chart. You can see this little consolidation taking place right here, creating a little base. Will it continue to up? Will it break through this little high area? We'll see. If it doesn't and it breaks under, expect to find support at the Tenkan-sen, the 200-day, the 26 period. On the daily chart, it does look pretty strong because it's broken through these levels, and we've got a bullish cloud, Senko span A. All right, that right there is above the Senko span B. The blue light colored blue line is above the purple, and everything looks okay on the daily. But again, on the weekly chart, we don't have all the confirmations on this higher time frame, and so that's why I'm more skeptical about everything. If you look at the 540.81, that's where we found resistance in the past. We're not that far away from there. We are approximately, just to get a sense here, we're about 4% away. So yes, we could theoretically move up to 4% and then pull back, but we got to wait and see what happens here. S&P 500 on the weekly chart, similar story. Tenkan-sen is under Kijun-sen. All right, it's been moving up, but it's kind of stalling a little bit here. Here's a daily chart, and here is the 2-hour. So, yeah, I mean, it's even on the 2-hour, everything seems to be pretty strong as far as the trend has been but it has been consolidating for a little bit now. Let's look at the VIX, which represents the volatility in the markets. Here we are on the weekly chart, under the cloud, on the daily, under the moving averages in the cloud. This is all good. It's kind of found some stabilization here at around the 18 level. You can see all these multiple days here. And on the 2-hour time frame, the VIX is also still, moving in a downward direction, which is actually good for the markets. Okay, let's take a look at those stocks they talked about on the show now. Start off with XLI, which is the industrials ETF. And if we look at this on the daily chart, we are coming to a level of resistance now. Look at this. Look at this long move up. We got a doji. If you guys aren't familiar with this is a reversal candle right here that we're seeing. It looks like a little cross. And if I just pop up the cheat sheet here, you can see. All right. Yeah, doji. It's kind of like a neutral type candle, right? It doesn't really signify anything. It means that neither the buyers nor the sellers were able to take control on that day. But that's a problem. There's a problem when it happens at the top of a move. And it closed under the prior day's closing price, down 0.36%. Here's the 2-hour time frame. So you can see that it's just, again, stalling at that 144.51 level, a daily level. Going back all the way to this prior high, Wednesday, November 27th, 2024. That's where we're at with industrials. We're back at those levels after this big run up. Will we have enough power to get through that 144.51, enough momentum to break through? I don't know. We'll see. ITA is the Aerospace and Defense Index Fund. This has been a strong uptrend, right? There's been a lot of spending in defense, and this is one way to invest. Basically, hold an ETF like this, which, as we can see here, when I open up the component list, here's a list of about 33 of the stocks that are inside that specific ETF, and so it's still looking pretty strong on the weekly. It looks pretty good on the daily, maybe slightly. I'm not too happy about that candle right there. It does look like a spinning top, which is also a reversal candle, but we've also had a few other negative reversal candles, and then it continued to move up. So until we see, I think what we want to pay attention to also is the ADX here on the directional movement index indicator that I'm using here. As long as that white line continues to move up, I think the probability of a continued move up is going to be strong. Once this thing starts to turn down, the white line that you see right there, that's going to show a loss of momentum, and that can lead to maybe a little pullback. Could be short-lived and then continue. So, I mean, I can go back in time and show you an instance where that occurred. I mean, we don't have to go too far back actually on the daily chart. Actually, let's look at this even on a weekly chart. It doesn't really matter. Okay, so let's go back here. You can see here where the ADX was moving up. Here it declined. Let me just show you. Right there, you can see that the ADX started to decline, and if we go straight up, it happened on that candle, and it dropped a little bit. It basically happens every time. Like here, it was moving up, it declined right there, and all right, over here, if we go straight up, you can see the little decline that happened right there. Or even after this little move right here. Whoops. Right there. And you can see the decline that took place. If we switch it to a daily time frame, you'll be able to see the same stuff, like that move up. All right. So basically, that's an important. That's just an additional indicator that I like to use occasionally to help me identify the strength of the move up. Let's look at 3M Company. It is coming close to a level of resistance. So Josh Brown likes this one. It was his final trade today, but it is coming close to 156.35. So would I be entering a long position when a price is just 1.5% away from its all-time? Is that an all-time high? No, it's not. But it is, the high from. Let's see, when is that date? March 3rd, 2025. All right. So that's the thing I'd be watching. If it can break through that, then I can see a continuation. Uber was down 0.64%, but it's in a strong uptrend here on the daily and on the weekly chart, breaking through that 87 level. Last week that happened on Friday, May 16th. It broke through that 87 level. And so I think it's good. We're going to see a continuation for Uber as it's hitting all-time highs here. eBay has not hit all-time highs. As you can see, the all-time highs go back to 2021. But what has happened with eBay is it did break through that prior high. February 26th, 2025, We came back to that level here on March 10th, right there, and it dropped. This time, okay, 2 weeks ago on May 16th, price broke through, and now it's, I'm sorry, 2 weeks ago. May 16th was on Friday of last week. I'm looking at a daily chart here. On the weekly chart, it did break last week above that level, and we're seeing a continuation. RTX also breaking through, right? So on the daily chart, just broke through that high right there of 136.17. It's at 137.18 right now. I can see that continuing to move up. ADX is moving up. That's good. Axon Enterprises, this one broke through that prior high on February 18th, 2025, on May 13th, last week, on Tuesday. Notice how price found support at that level, right there. And then it bounced, and now it's continuing to move up. That's what you can expect when price breaks through prior levels of resistance. Typically, if price gets under that 715.99, then you want to consider taking, closing your position, maybe, reducing your position. It's really up to you to determine what you want to do, but it's going to basically show weakness if price gets under that 715.99 level at this point. Pfizer is another one that, had some positive news, and as you can see here, it did on the daily chart, it popped 2.26%. The only problem with Pfizer is it's now, look where it's stalling, right at the Ichimoku cloud. In fact, once it reached that cloud, it penetrated it briefly. It's that little wick right there, and then it came right back under. So it towards the end of the day, it started selling off a little. Actually, it started selling off around 10:20 a.m. So it reached this high point at around 10. What time was that? 10:10 a.m. And then it dropped 0.72% from that level. UNH, United Healthcare Group, it's had a little bit of a move up, but I want you guys to pay attention to something really important: the volume. Yes, there was a lot of buying that took place here. You can see the big volume bar that represents how many trades were being placed that day. And if we look at it, it was about 121.6 million trades took place on that specific day, May 15th. How about today? 41.2 million. So you can see the decline there. And so when you see that volume declining as price is moving up, that's not really a true move as far as I'm concerned. It's giving us basically opposite information. As price is moving up, there's less and less buying taking place. In fact, if you look at this candle right here, it looks like a reversal candle. It looks like a little bit more of a doji type, spinning top type candle. So I wouldn't be surprised if price pulled back tomorrow. It is a resistance level. All right, and then Stifel Financial, this was Brian Belsky's final trade. Let's look at this on the weekly first. It is inside the cloud. Tenkan-sen is under Kijun-sen. Chikou-span is underpriced. So on the weekly, it does not look good. On the daily chart, it has broken through the Ichimoku cloud. That happened here on May 13th last week, and it's holding up. You can see that the candles keep finding support at the top of the cloud, which is a normal reaction when price reaches that level. It's also staying under the 200 though, so it's kind of stuck. It's just creating a base. So I'm not sure how long this will last. I'd be very cautious. I wouldn't be entering a long position here, just based on the weekly chart. If we look at this on a 2-hour, you can see that it's been declining here, right? It might be short-lived. It might be just a short-lived pullback. But if you look here, we've got a negative crossover. The Tenkan-sen got under the Kijun-sen. What about Disney? That was Jim Lebenthal's trade, or our final trade today, May 20th. This one's kind of stalling too. It has had a little run here. It got through. It gapped up above the 200-day moving average on May 7th. It broke into the cloud, got above the cloud. It's continuing its move up. Where is it going to stall? Well, it looks like there's also a level of resistance right about here. This prior high of 115.55. So that might be a good place to maybe start taking some profits if you happen to have a position here. Before, because it looks like it's stalling out here. I don't know. We'll see. And TFC, Truist Financial Corporation. This was Stephanie Link's final trade. Now, Stephanie also picked this stock back on October 18th. I had a note from a prior show. And let's see, October 18th. Let's go back to October 18th. That was right on this candle right here. So since that point, right there, let's see, it's dropped about it dropped more than that. So again, October 18th, let's look at that again. October 18th. So I can measure from that little candle. If I look at the very, very lows down here, it had dropped 23.35% in 5.6 months. Now it's recovered a little bit. So now she's only down from that trade about 7% or so. All right. So right now it's re-entered into the cloud. So I wouldn't be entering a long position. Price is also, as you can see here, still under the 200-day moving average. And the 200-day seems to be declining right now. It's not sort of moving up or flat. So yeah, I'd stay out of that one. Let's take a look at the Mag 7. We got Microsoft here on the daily chart. Now Microsoft, as I've said before, looks the strongest out of the bunch still. Why? Because all of the elements of the Ichimoku, except for the cloud itself, which is still bearish, the Senko Span A is still under Senko Span B, but everything else seems good. Meaning we've got the Tenkan-sen Kijun-sen at the same level. The Chiku Span, the white line, is above price 26 periods ago. And it's breaking through 456.16 right now. So I like what I'm seeing. I think it's more than likely to reach that 468.35 level, which is about another 2.2% away. That would be reaching Microsoft's all-time highs, which were back here, okay, around July 5th through July 12th, somewhere in that vicinity. Let's take a look at NVIDIA. NVIDIA looks good on the daily chart. On the weekly, however, we also had that crossover, the negative crossover of the Tenkan-sen under Kijun-sen. We've had this decline, but it's starting to show some strength again. And here it is on the 2-hour. It's just kind of going sideways. How about Google? Google on the 2-hour is under the Tenkan-sen, in between the Tenkan-sen and Kijun-sen. On the daily, it's inside the cloud and under the 200. And on the weekly, it's inside the cloud. So there's nothing to do here. Tesla, here we are on the weekly chart. It's stalling still at that 26 period. Okay. And so even though price was up 0.51%, if we look at the daily chart here, we formed a reversal candle, but we are still in this little range. Okay. So it's unpredictable at this point to know exactly where it's going to go. Neither the buyers or sellers are in control here. There's indecision, basically, is what this is telling me. And if we look at this again if we look at this on a shorter time frame, like the 2-hour time frame, you can see it closed at 4 p.m. under the Tenkan-sen. How about Amazon? On the 2-hour, it's looking pretty bearish. On the daily chart, it's above the cloud. Doesn't look bad here, but it has pulled back. Still above the 200. And on the weekly chart, it's not that great because Tenkan-sen is under Kijun-sen. So, it's moved up, and it's just, we don't have a strong trend, basically, is what I'm saying. Apple is inside the cloud on the weekly chart. On the daily, it's inside the cloud. And on the 2-hour, it's negative. It's under the moving averages. So I wouldn't be adding a position here either. Same thing with Meta inside the cloud right here. Tenkan-sen is under Kijun-sen on the 2-hour. Here's the daily, looking more bullish. On the weekly chart, it's not that great. Tenkan-sen is still under Kijun-sen, even though price is above the moving averages. So I'd hold off on Meta for now. Let's take a look at the sectors. So I've got the strongest sectors here highlighted, and ETFs. Strongest sectors and ETFs. Here's GDX. Let's look at these on the daily. So GDX, as you can see, has moved up. It is in a downward trend. However, with that said, on the weekly chart, it is a very strong it's in a strong place, right? We can see that price is above the Tenkan-sen, Kijun-sen, the Chikou span is above price, and we've got a bullish cloud. So on the weekly, the gold miners ETF looks strong. In fact, it's also bouncing off that Tenkan-sen. However, these last, I don't know, since April 16th, you can see this little decline. Now, I call this a bullish pattern, though. I know it's not, it's hard to see that, right? In this what you're seeing right here. But basically, that falls under a bullish flag pattern, as I've talked about in a prior video here. It's after a move up. You will sometimes see a short-lived decline where price creates a low. You get a lower high from the prior one. You get a lower low from the prior one. But it's a short-lived thing, and maybe price breaks through that trend line, and that can be obviously very bullish. The opposite of the bullish variant here, it would be the bearish variant. After a move down, you see a short-lived little move up, and then it declines, which is kind of what I'm thinking about as far as the markets, actually. The S&P 500, the NASDAQ. I think that we might be experiencing something like this right now in the SPY on the longer term time frame. Okay, so so on the 2-hour time frame, you can see that GDX broke back above the 200-day moving average and broke right through the Ichimoku cloud. So if it breaks through that level, if it breaks through this long trend line right here, I think that GDX is going to take off. Okay, so industrials, we already talked about that in a few minutes ago, right? We covered that. So we're going to take a look next at Bitcoin. It's at 106,800, coming close to some levels of resistance around 109, which isn't that, I mean, it's not that far away. We're getting close to the all-time highs, folks. It looks good on the daily, on the weekly. We've got the Tenkan-sen still under Kijun-sen, but it looks like it's about to cross. You can see that it has been moving steadily up, and if we get a crossover, that's going to be a very bullish signal. At the same time, we'll probably notice the price breaking through this high, right? So watch out for that. Bitcoin could take off here pretty soon. And here's a 2-hour time frame. Looks pretty good in the 2-hour as well. Nothing negative as far as the Ichimoku rules. How about XLC Communication Services? Let's look at this on the weekly first. This one is not perfect yet. Tenkan-sen is still under Kijun-sen, but it had bounced above the cloud. The future cloud looks bullish. Chikou span is above price on the weekly. It's moving up. Here is the daily chart, looking pretty bullish as well. But we did get a doji type candle here today. All right, so that could lead to a pullback a little bit. IBIT is Bitcoin ETF. Again, that's also coming close to the 6175 level. It's approximately 1.68% away from that level. If it can break through there, I think that we will see a continuation. That's the daily. Here's the weekly. And here is the 2-hour. So you can see that unlike the indices where price has been stuck in a range, Bitcoin is actually breaking through that range, isn't it? Okay, so that's why it looks stronger. How about utilities? Let's look at utilities on the daily chart. Coming close to a level of resistance, 83.41. It's not that far away from that. It's about 0.67%. Here's a weekly chart. And here's a 2-hour. So like it's kind of stalling. Here's GLD. And GLD on the weekly chart bounced, as you can see here. It actually gapped up on Monday, and then it's continued to move up here on the weekly. And then here's the daily. So you can see these multiple days now since Friday of last week, May 16th, where it reached kind of a bottom area here. It's moved up 3.84%. It was up 1.86% today. On the daily time frame, price is still under the Kijun-sen though. All right, so I do believe that this is also one of those type of bullish flag type patterns, like I've said before, where you might have a short-lived little decline, right, of a lower high right there, a lower low, but it's not like a significant drop, as you can see. That's why I feel like it's a higher probability. Once we get above this trend line here, gold could certainly continue moving up. All it takes is some negative news out there, and gold will take off. The rest of these ETFs I'm not going to get into because, here's the weekly chart. You can see XLB Materials is under the cloud. They're pretty bearish. The majority of they're not looking good on the weekly yet, and so I'm looking for confirmation. All right, so let's look at Sony. Sony was requested by one of our members, and here it is on the weekly chart. It's a stock that I've owned in the past. Right now, it's coming back to that 2608 level, a level of resistance. I think that there's a good possibility here that we could break through based on the candle that we're seeing right here. It's a bullish engulfing pattern. It engulfs the prior candle. And so we're stalling at 2608. And then the all-time high for Sony is 2675. So let's look at that monthly chart. And you can see right here. Oh, I take that back, folks. It's not the all-time high. All-time high goes back to 2000. Hold on. Let's find out what the all-time high is. 3148. Yeah, 3148. So let's throw that on there as a monthly level. Remember, each time frame, that's the highest time frame is the most significant. So 3148, and I'm going to color that purple to signify that time frame. The light blue is the weekly level, and then the light red is the daily. It's just an easy way for me to determine what resistance level I'm looking at, basically. So if we hypothetically get through that 2675 level, which is not that far, it's only 3.7% away, then we have a potential of reaching that 3148, which is about 18.22% away. So I could see that certainly taking place within the next year or so if we can break through that 2675. So there's the monthly, here's the weekly, daily time frame. As I said, it's kind of stalling in this area here. That's why it's important to wait, I think. And here's a 2-hour time frame, right? So we're kind of just waiting it out here to see what happens. The momentum is starting to increase, which is good, but you can see in the last few hours, at around 2 p.m., price dropped a little bit, not that much, about 0.55%. Here's a 5-minute chart today. Price gapped up a little bit in the morning. You can see that gap up right there on the 20th, and then it moved up from that opening price. It moved up about, let's measure that real quick. It moved up about 2.77% before, hold on, from yesterday's closing price, I'm sorry, from yesterday's closing price, it's moved up, you can see there, about 3.63%, and it finally closed up just 3.04. Inside the cloud on the 5-minute. This is a very short time frame, though. I wouldn't pay too much attention to that. It makes sense to look at the daily and 2 hours time frames more, and it is pulling back a little bit, so just be cautious with this one. And that's going to do it for this video. If you want to stick around to find out about how to become a member so you can access the member-only videos, all right, stick around. Here we are. So basically, this is my homepage on YouTube, Blue Cloud Trading. Really simple. All you need to do if you want to access these member-only videos that I produce every weekend, where I go over my entire portfolio, why I entered long positions, why I closed out of positions. I've been profitable now pretty much the last 4 weeks. Every week in a row has been a really good week. And I basically do a summary in the beginning part of the video, and then I basically go into each of the stocks that I traded throughout the week. And then I also give about 20 or so ideas, stock ideas for the upcoming week. So that's what I did in this video that I produced 3 days ago. How can you access these videos? Really simple. Right next to the subscribe button. Remember, it's free to subscribe to my channel. Right here, click on the join button. If you do, this little pop-up will come up. And there's 3 different tiers. You got Blue Cloud Supporter. So I do appreciate anyone that has become a Blue Cloud Supporter. That's at $4.99 a month. Blue Cloud Trader, it's $24.99 a month, and this is where you can access those videos, the member-only videos. You just hit the join button and then follow the steps there. In addition to that, you can request stocks to be analyzed on the show. Blue Cloud Legend level member is $49.99 a month, and basically under this level, you will also, in addition to the exclusive member-only videos that I just showed you guys, You'll have access to day trading videos that I've recorded, and you will also get a daily trade update that's posted. Now, the daily trade updates I post under the posts section. Once you become a member, there'll be a new little tab that pops up here. It will look like this. It'll show up as membership. And once you're a member, that's where you would click to find those daily posts as a legend level member. All right, and that's going to do it, guys, for this video. If you like the software also that I'm using here, the TC2000, this right here, which is great. Really easy to get a $25 coupon for this. Again, same place, just come to my homepage, and instead of the join button, what you want to do is click on 9 more links right here. You'll see this pop up. Just scroll down a little bit, and you'll find the link right here, tc2000.com/download/Blue Cloud Trading. Click on that. You can enter your email there, download the software. To find out about the pricing, you just click here. And you can see that under monthly, for example, it's $9.99 a month for silver, $29.99 a month for gold. I recommend the gold for if you're a newbie. And the reason is because you have all these other features here that are not available under the silver. If you want to be able to draw on the charts, that's really an important one, like trend lines and whatnot, or create alerts. Maybe you want to see the fundamentals, like I have on my charts, right? So if you're looking at Sony, you can see all these fundamentals up here, and you can actually add whatever you want. Under the, you just right click up here, hit edit toolbar. Okay, and let's say that I want to add another row here, and I can add any of these things that you see popping up below. I'll just kind of scroll down through them. See all those fundamental? You got cost of sales, debt to equity ratio, all kinds of ratios and formulas. There's a lot. Even specific candlestick patterns, like the candle doji star or candle hanging man or harami, all the ones I talk about. You'll see a lot of those in there. And let's see, what else do they have down here? Yeah, there's just a whole bunch of things that you can add. Okay, you just add them, and you can edit this part, make it how you want it. So that is a great feature. And if you want to get that discount, just go to that site, to my site, my homepage, like I said, and become a member, and order the service. They also have a brokerage right here. Why trade with TC2000? So you can actually trade through. Now they use Interactive Brokers as their routing, the smart routing from Interactive Brokers. They've actually partnered with them, and you can find out about the commissions right here, how much they charge. It's like $1 plus 0.005 cents per share. Yeah, all the information that you need to see is right here. Guys, thanks for watching. Appreciate you all. I hope you all have a great rest of the evening. Talk to you later.